Can the HDFC Click to Achieve per Advantage plan help you achieve your long-term financial goals, or should you explore better alternatives? Let us find out through an in-depth analysis in this video. Hi, welcome to Holistic Investment.in. We help individual investors like you to make the right financial and investment decision to reach your financial goals in a more faster and smarter way. Now, before analyzing this policy, let us first understand what is this policy is about. So, this is an individual non-linked participating savings life insurance plan. Some of the key features of the policy are: you get to customize your plan by selecting any combination from the 5 available options to suit your future financial needs. You have the option to add an additional life cover for your spouse. The premium offset feature in this policy lets you adjust your premium payment using cash bonuses and or guaranteed payouts where applicable. You can also convert part of all your cash bonus into paid up additions for enhanced benefits. You can choose to accumulate your cash bonus or guaranteed payout and withdraw them as a lump sum when needed. You also get potential tax benefits which may be available as per the prevailing tax laws. So these are all the key features. Now let us take a look at the plan options. So first of all, we have lump sum option, balanced income option, yearly income option, enhanced income option and guaranteed income option. And all these options have benefits like death benefit and also like survival benefit, maturity benefit and guaranteed income benefit. All these options have these benefits and it will differ based on which option you have chosen for your policy. So based on that it will differ. So if you want to know more about it in detail, you can refer to the policy brochure. Now let us move on to understanding the advantages of this policy. So the advantages are: you have the flexibility to modify both premium payment frequency and payout frequency, and after completing the 5 policy years you can reduce the premium by up to 50% of the original annualized premium. You get to choose a special date to receive your cash bonus and or guaranteed payout as per your preference. You have the option to receive your death benefit in installment over 5 to 15 years instead of a lump sum. There are policy loans available up to a maximum of 80% of the surrender value. You can also enhance your coverage by adding rider options with an additional premium. So these are advantages. Disadvantages are: annual survival benefits interrupt the power of compounding. You are choosing a shorter deferment period for survival benefits which reduces your maturity payout. The sum assured may also not be sufficient. Survival benefits often lead to discretionary spending. So these are all disadvantages that you need to be mindful about before deciding to invest in this policy. Now, as we have a basic understanding of this policy, let us move on to the analysis part of the video. So these benefits are non-guaranteed as they depend on bonuses. That's why we are going to assess the potential returns of this policy by calculating the internal rate of return IRR based on the figures given in the policy brochure. So for calculation purpose, let us assume that a 35-year-old male opts for this policy with a sum assured of 10 lakhs, a policy term of 20 years and a premium paying term of 10 years. The annual premium is 1.5 lakhs. From the 11th to the 20th year, he receives an annual survival benefit which is followed by a maturity payout at the end of the policy term. So the example here, how we are going to analyze the 2 possible return scenarios is through future rate of returns, like future rate of return, 4% per annum and 8% per annum. This is not guaranteed and nor indicative of the upper or lower limits of the potential returns you can get from this policy. This is just to indicate the worst and best case scenario, for just to give you an idea about it. So at 4% return in the worst case scenario, the annual survival benefit is 32,142 rupees and the final maturity value is 19.53 lakhs. So it results in an IRR of 2.83% as per the policy's maturity calculator. At 8% return, the annual survival benefit is 1,12,736 rupees and the final maturity value is 24.71 lakhs, yielding an IRR of 6.40% as per the policy's maturity calculator. Although the 8% return scenario may seem appealing, a 20-year investment horizon demands better returns. Over time, the final maturity value may fall short of meeting the inflated cost of your goals, and the survival benefit will lose purchasing power. Ultimately, neither the survival benefit nor the maturity proceeds provide meaningful financial support. So the plan may lead to a shortfall in the required corpus, disrupting your financial goals. So, as this policy is not giving us a desirable outcome, come, let us compare these figures with other alternative investment options in the market. For consistency, we are going to use the same assumptions as in the previous example: a sum assured of 16.5 lakhs, a policy term of 20 years, and a premium paying term of 10 years. Similarly, we will consider a similar survival benefit and a maturity payout as projected in the 8% scenario of the HDFC policy. So, what we are going to do is we are going to decouple insurance from investment. So for life insurance purpose, we are going to invest in a pure term life insurance policy. The cost would be 13,700 rupees per year, leaving 1,36,300 annually for investment. This amount will be allocated to generate both regular income and a final maturity benefit. For the first 10 years, the investment is directed into an ELSS fund to accumulate wealth. The pre-tax corpus grows to 26.78 lakhs, and after capital gains tax, the post-tax maturity value stands at 25.30 lakhs. So you can take a look at the ELSS tax calculation presented on the screen, and the accumulated 25.3 lakh corpus is then reinvested at a 7% return, generating an annual withdrawal of 1.12 lakhs for the next 10 years, matching the survival benefits of the HDFC policy. So at the end of the policy term, the remaining investment is fully withdrawn, yielding a final maturity value of 35.32 lakhs. So the IRR for the structured cash flow is 7.98%. This approach meets all financial criteria like life cover, survival benefits, and maturity benefits, while also ensuring returns that outpace inflation. The returns could be even higher if withdrawals are deferred, and a step-up withdrawal strategy can be implemented to counter inflation. In contrast, the HDFC policy struggles to keep pace with inflation in the long run, making it less effective in securing future financial goals. So what is the final verdict? Should we invest in HDFC-like policy? Is it worth investing? So HDFC Life Click to Achieve Par Advantage Plan is a protection-oriented savings policy where you pay premiums for a limited period, receive survival benefits during the policy term, and receive a lump sum maturity benefit at the end. Additionally, the plan allows you to customize benefits and structure your cash flow based on your changing financial needs. However, all benefits under this plan are non-guaranteed. Analyzing the returns reveals that they do not compare favorably with other long-term investment options. So while the HDFC policy offers flexibility in structuring cash flow, the potential returns may not be ideal for an investor, and it also has a high agent commission. A more effective approach is to build a diversified investment portfolio tailored to your financial goals. This allows you to align your cash flow with your needs as they arise. Additionally, securing a pure term life insurance policy ensures financial protection for your family against uncertainties.
If you want to read more about this policy, then you can definitely check out the blog post we have posted on our website through the link in the description. And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to our YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.